Hey guys, it's Dylan. So, the aftermath of Tesla's Q1 earnings. But first, real quick, honestly, after every earnings call, I generate a deeper appreciation for Tesla. And it has nothing to do with the numbers, the performance. It's really the passion of Elon and the team, the innovation, the execution, the problems that they're solving. I'm just genuinely grateful to be able to watch this Tesla story unfold, to have this small little channel and community where I get to talk about something that I'm genuinely passionate about. And honestly, I think in 10 to 20 years, being able to look back at where Tesla is today, it's going to be absolutely profound what Tesla means to the world. I don't know. It's just a pretty awesome story, and I'm happy to be doing what I'm doing. But getting into it, Tesla is down about 3.7% so far today, trading at about $710. And I actually think this is pretty easily explained. So I'm not going to get into all of the notes that I took from the call and from the report, but there are definitely a few things I want to cover here real quick. So first, we have the gross profit and regulatory credit situation. Once again, Tesla's net income, net profits are less than the regulatory credit revenue. So people are complaining about that. And when you add into that the fact that Tesla sold Bitcoin to the tune of $100 million in profit, that would leave them with about a negative $200 million net income line after those one-time line items. Now, here's the problem with this. People are just taking those one-time line items and cherry picking. Well, there's other things we can add to that list. If you take a look, there's a $300 million one-time line item on the other side that hurt Tesla's numbers by $300 million, Elon's compensation plan. As we know, there's only about $700 million of that plan left in total, and then that's going to go away for good. So add into that also the fact that there was a one-time $200 million cost due to the S and X refresh that hit the cost of goods sold. That shouldn't happen in the future quarters. So guys, that's $500 million right there that could be added back into Tesla's net income that are one-time line items. So if we want to start cherry picking these one-time items and saying, oh, well, regulatory credits, this and that, well, you have to add in those things too. So all that said, it was actually a very strong quarter. But when you factor in the expectations, I think that's where the problem lies. After the 185,000 deliveries in quarter one, a huge number, awesome report, people were expecting the financials to just smash Wall Street expectations, and that didn't happen. And we learned why. I mean, the supply chain issues, the semiconductor issues, the SNX refresh, the one-time line items, like it's very easy to explain why the numbers didn't blow Wall Street expectations out of the water. So we just need to temper expectations and not get too crazy on quarter-to-quarter numbers in the first place. And one other point I think that's caused the depressed Tesla stock price today is the vague delivery guidance. So a lot of people were expecting Tesla to kind of, forecast closer to 1 million vehicles delivered this year, but they really just stuck with that 50% annual growth, which 500,000 deliveries last year would put them at about 750,000 this year. Now, I personally think this is sandbagging a little bit. And obviously, if you take 185,000 in Q1, typically the slowest quarter, multiply that by 4, that's 740,000 vehicles just based on Q1 numbers extrapolated for the year. So I think we can reasonably expect, 850, 900,000 without any type of unexpected events for the year. So that's most likely sandbagging, but I think a lot of investors wanted a newer guidance that was closer to, the 900,000 to 1 million vehicles this year. And one last really important point here on the margins, and then we'll move on. So Tesla hit 22% auto gross margins ex regulatory credits, and that's with no Model S and X sales. And what this really means is that with Tesla's Model 3 and Model Y, the margins are very strong with no S and X sales. So once the S and X come back online, as Elon told us in Q2 and ramping into quarter 3 of this year, the new refreshed Model S and X, that's only going to help their auto gross margin numbers. And so Tesla really doesn't need the S and X to drive their auto gross margins, which is a very important thing going forward. And on top of that, if you take out some of the one-time line items from quarter 1 and add those back in, Tesla's auto gross margin ex regulatory credits would be at about 23.8%, which is very strong. Once again, sequentially quarter over quarter and improvement. But so with all of that said, I think it blows my mind that people always forget, like Tesla is not trying to be profitable right now. I mean, it sounds crazy, but anybody that knows anything about Tesla and the company, they are trying to grow and gain market share as fast as possible. They are expanding globally, rapidly. That is the focus. And so anyone that is out here saying, oh, well, Tesla can't be profitable because of X, Y, Z, it's like so far from the truth. If Tesla just wanted to focus on being profitable, they could easily do that, but they would sacrifice growth. So I don't know why people on Wall Street still spend so much time on profitability. It's like, you guys, you should by now understand what Tesla is about and stop focusing so much on strictly the bottom line and the profitability and zoom out and look at the numbers and the production and the fact that Elon thinks the Model Y will be the best selling vehicle on the planet of any type of car within the next 2 years. Like, this is the stuff that matters. The one time numbers quarter to quarter, that it's going to fluctuate and some will be good and sometimes it won't. And that brings us to the next point that we have to talk about. It's the Bitcoin reporting situation. So I'm going to go through this pretty quickly, but here's how it's going to work. Basically, as far as what we know with the SEC right now, when Bitcoin goes down, if Tesla reports for that quarter, they're going to have what we call an impairment charge. It's going to be an expense, so it is going to impact their net income. So hypothetically, if the price of Bitcoin goes below what Tesla bought it at, they're going to have that impairment charge. Take a look at Tesla's SEC filing for Bitcoin. Moreover, digital assets are currently considered indefinite-lived intangible assets under applicable accounting rules, meaning that any decrease in their fair values or the market value below our carrying value is just the price at which they bought it at, for such assets at any time subsequent to their acquisition will require us to recognize impairment charges, whereas we may make no upward revisions for any market price increases until a sale. So I called out Meet Kevin on my other channel with this because he said that reversal of the impairment, meaning if the price of Bitcoin comes back up for Tesla, that they can actually flip that impairment charge and it would be an increase to Tesla's net income, but that is not the case, and here is why. So first, under US GAAP accounting principles, which is what the SEC requires for most American companies, once an impairment loss has been recognized for assets held for use, it cannot be reversed. In other words, once the value of an asset held for use has been decreased by an impairment charge, it cannot be increased. For assets held for sale, if the fair value increases after an impairment loss, the loss can be reversed. So naturally, the big question becomes, is Tesla going to classify Bitcoin as an asset held for use or an asset held for sale? And because we don't have any specific information just yet, we need to take a look at MicroStrategy, the market leader in a corporation owning Bitcoin. So here we have a report directly from MicroStrategy on accounting and tax implications for Bitcoin. And they say right here, the company will record impairment losses as the fair value falls below the carrying value of the investment. So if the price of Bitcoin falls, they're going to have an impairment charge. And such impairment losses are not able to be reversed upon a subsequent increase in fair value. So a quick summary, Tesla will most likely not be able to reverse those impairment charges. So they bought it for $1.5 billion. Let's say, next quarter it goes down and they have to report a $500 million loss. It goes down to $1 billion. That would be a $500 million impairment charge that reduces their net income. Now, Meet Kevin said that in the next quarter, if the price of Bitcoin came back up to the original $1.5 billion purchase price, and that $500 million gain would be able to improve their net income line. But MicroStrategy is not doing that. The SEC and GAAP rules say that that is not an option. You cannot reverse the impairment charges of that indefinite lived asset. But what this means is that any appreciation in Bitcoin is not going to hit any of Tesla's financials. So Bitcoin could literally 10x and it will mean nothing to Tesla's financials until they sell some of it. So we have to remember that because honestly, this is such a big deal. Tesla bought $1.5 billion in Bitcoin. The market cap right now is 1 trillion. Let's say the market cap 10x's to 10 trillion, which by the way is the market cap of regular gold. And you have people like Yassine at ARK Invest who say that Bitcoin is 100 times more valuable than gold, which would mean the market cap of Bitcoin is basically on a trajectory to be well over $10 trillion. But let's just rewind and say that it only is a 10x from where Tesla bought it. They bought it at, we'll say, roughly $30,000 a coin, and it ends up at $300,000 sometime in the next few years. That would be a $1.5 billion investment to roughly $10.5 billion in profit from simply holding Bitcoin. That obliterates anything Tesla has ever done on the auto side. And that's not a bad thing at all. I'm just saying this will end up being so impactful. And then you can talk about Bitcoin mining and the energy side and Tesla battery storage for renewable energy generation and driving the mining costs lower. They literally said on the conference call, guys, that they will, I have it right here, they will make Bitcoin related announcements in the future. So it's like they're studying this market. They are paying very close attention, and the Tesla Bitcoin story is really only getting started. I think there are huge things in the future, whether it's mining themselves or supplying products for the miners. This is going to be an awesome storyline to unfold over the next 5 to 10 years. But with that, if Tesla makes subsequent Bitcoin purchases, and as we know, the price is going to fluctuate, we're going to see some of these impairment charges reduce the net income that most people on Wall Street will have no idea how to handle. the Tesla stock price will take a short-term dive, which means we're going to have more buying opportunities. So it's absolutely something to watch. We will not see those reversement of the impairment charges. So Bitcoin appreciation, we're not going to see hit Tesla's numbers until they sell it, but the downside we will. And one last point about the Tesla Bitcoin situation. You probably saw this tweet from Dave Portnoy, but I want to focus on Elon's response. So we did learn that Elon does personally own Bitcoin himself. He says it right here. Tesla did sell 10% of its holdings to prove liquidity of Bitcoin as an alternative to holding cash on the balance sheet. So no, Tesla is not panicking. They're not having paper hands here. They just wanted to test liquidity, which is a massive deal. They needed to know that they can sell a large amount easily, quickly, to treat it as a cash-like investment in the event that they needed to liquidate more for any business operation. But after the conference call, they're still super bullish on Bitcoin. And like I said, there's a lot of underlying stories brewing right there. I can guarantee it. So to wrap it up, once again, the market's really good at cherry picking the negative stuff and not really understanding the bigger picture and not putting in the other one-time line items like the stock-based compensation and the SNX cost of goods sold one-time expense. So all in all, I'm very pleased with the report. I don't personally put that much stock in the quarter-to-quarter numbers anyways. I really enjoy going through it and learning about the company and the expectations. But from an investor standpoint, what happens with the stock price on a daily basis means next to nothing for me. But with that said, please take a second to like this video. If you did, consider subscribing for more Tesla content, and I hope to see you in the next video. Have a great day.